Welcome to Pragmatic. Pragmatic is a show about technology and contemplating the finer details and their practical application. By exploring the real-world trade-offs, we dive into how great ideas can be transformed into products and services that impact our lives. Pragmatic is entirely supported by you, our listeners. If you'd like to support us and keep the show ad-free, you can by becoming a premium supporter. Premium support is available via Patreon and through the Apple Podcasts channel subscription. Premium supporters have access to early release high-quality versions of episodes as well as bonus material from all of our shows not available anywhere else. Pragmatic is also a Podcasting 2.0 enhanced show, and with the right podcast player, you can also stream Satoshis and boost with a message as you listen. Just visit engineer.network/pragmatic to learn how you can help this show to continue to be made. Thank you. I'm your host, John Chidgey, and today I'm joined once again by Dave Jones. How's it going, Dave?
Oh, it's going great. It's beautiful here. The weather is fantastic. I mean, usually in Alabama, it's 1,000,000 degrees and 1,000,000, humidity, whatever humidity units are, percent humidity.
Mm-hmm.
And now it's like, outside it's in the high 60s, just mostly dry. It's just beautiful time of year. We in Alabama we get like 3 weeks of gorgeous weather, and then it swings, you get this window of nice weather in the spring and another window in the fall, and the rest of the year it's miserable. So we're in the window. Yeah.
Well, the interesting thing is it's also in the 70s here. It's 71 at the moment. Or 22 degrees Celsius if you prefer Celsius. But yeah, and it's a beautiful day too. I love this time of year. It's a little bit cooler at night, but it's not too hot in the day. So we haven't quite hit summer yet. But yeah, spring is in full flight. So, but I do love this time of year where I live. It's sub-temperate kind of a climate. It's not quite tropical. Because I grew up in the tropics, so about a 7-hour drive north of here. I'm right on the Tropic of Capricorn when I was growing up in Rockhampton, and I feel that humidity complaint. It was always like 90% or more relative humidity, and it was stinking hot, and it was just generally unpleasant. But here, different story. So it sounds like right now today, though, different sides of the world. We got some almost identical weather, which is great. Not complaining.
The humidity. I talk to my kids about this. Like humidity is like 90% of comfort.
Yeah,
because you can take a room and not change the actual the real temperature of that room at all, and just lower the humidity and make a drastic difference. Like 75 degrees at 80% humidity and 75 degrees at 40% humidity are two completely different experiences.
Oh, totally.
Yeah.
Yeah. Absolutely. I actually did some work out at a coal mine, way back in my youth, or mine in 96, 97. And I was out in a township called Mara. And Mara is a good 3 hours inland from the coastline. And it was regularly in the 100, 110 sort of a temperature range. But the humidity was effectively non-existent. So you didn't feel it. You felt like, I'm walking through a blast furnace, but it's not really bothering me.
It's a comfortable blast furnace.
Yes, it's
more like a warm blanket.
Yes, it's like a scorching warm blanket.
Yeah.
But yeah, it's funny how that works. But yes. Anyway, all right. Humidity, yes, is not our friend. But okay, so on to what we wanted to talk about today is the reason I got you back on, and thank you for coming back on.
Anytime, bro.
Yeah, I just wanted to continue the conversation in two dimensions. One is a little bit about sort of like the Bitcoin thing that I've been grappling with, and I'm trying to get my head around some of the little nuances. But the other thing is mainly about some more stuff on Podcasting 2.0, particularly around sound bites. But I thought we should probably start with Bitcoin, and I run my Bitcoin Lightning node on a Raspberry Pi using Raspberry Blitz, And it's been, to be honest, pretty solid. Haven't had too many issues with it. And I've got a whole bunch of other little bits and pieces running on there. Like I run Helipad on there, and a Boostergram messenger that I did the Extract TLV Python script running over and over. And a few other bits and pieces, but it's been really good. And I've learned a lot about channel management and on the Lightning Network. And I've come a long way since we last spoke. So it's So it's been quite the interesting educational journey. And one of the things that I was thinking about with Bitcoin and have been thinking about for a year or more now is um, I do look at all the different other cryptocurrencies out there, and what worries me is the fact that they seem to be plagued by a lot of there's a lot of like pump and dump sort of stuff going on. There's lots of like some of them have boards and board members and consortiums and different interests, and some are driven by corporations. And the one thing that Bitcoin doesn't have is, well, any of that.
Yeah, that's right.
I sort of look at that and I think to myself, well, is there actually any other cryptocurrency out there that is actually truly independent like Bitcoin? Because I think it's the only one that there is. I mean, correct me if I'm wrong.
I would say that Hive is probably the only other one that that is similar.
Hmm.
And that I think is almost purely by accident because, I mean, now I'm not the Hive blockchain historian by any means, but I do know enough to know that it was a split of some sort from Steem, I think was the original blockchain, the name of the original blockchain that Hive came from, and I think a lot of the protocol is the same between the two. I think they've diverged now, but if I don't if I know this correctly, if I know this history correctly, I think there was this some sort of like dissatisfaction between different factions within Steam, and then there was like this takeover. Anyway, a bunch of nastiness, and then what got split out or forked out of Steam became Hive, and
Okay.
I think the result of that, like a lot of these, what you're talking about, is there's a lot of pre-mining that goes on. A lot of the people don't realize that a lot of cryptocurrencies, a lot of blockchains are owned by they're owned by companies. So something like Cardano or these different cryptocurrencies that you hear about, XRP, they're actually owned by a company, and they do what's called a pre-mine, and so the company or the stakeholders or whatever get a certain share of the coins up front before the blockchain goes public. And I believe that was the case with Steem, if I'm not mistaken. But because of this split thing that happened, I think what you ended up with is sort of an independent blockchain that it's proof of stake, but I don't think it's not owned by any corporation. It's actually open source and decentralized, and it doesn't have the pre-mine factor in it. I think there were some whales and some beneficiaries that happened during that whole transition, but I believe it's a more pure entity than almost any other coin that I can think of. Oh, well, there's Monero. That's another one. So Monero is unique in a lot of ways too. It is proof of work like Bitcoin, but its shtick, so to speak, is like it's not just an AES hash that goes as fast as you can go. It's more of I forget the exact technology, but it's like scrypt or something like that, where it's meant to be a sort of a GPU CPU neutral sort of thing. You can mine Monero just as well on a CPU as you can on a GPU.
Yeah.
So you can actually still be profitable as a miner with normal hardware.
Okay.
And Monero is a very interesting coin. So I think and there's very privacy focused, and it uses this relay system, and it also does like a variable block size. So with most blockchains, the block size is fixed, and so that could be like 1 megabyte, 5 megabytes, whatever, and that means that the blocks can only hold a certain number of transactions because you can only fit that much data in there. So for Bitcoin, for example, you can fit between 2,500, 3,500 transactions. I think on average it's around 2,800 transactions per block. Monero uses a different setup where it's got this idea of variable block sizes. The blocks can get bigger and smaller in reaction to things that are going on, pressure, like mining pressure on the network. I don't fully understand it, but the problem, if there's a big weakness with Monero, it is that it's very privacy focused, and it's very difficult to ever find out identity. It's anonymity first. That really makes people suspicious of it, and especially governments and that kind of thing.
Definitely.
Yeah, the weakness of Hive, if there is a weakness there, it's that it's not huge. I mean, there's a limited number of API servers, so you don't have the breadth that you do with Bitcoin. Something, thousands and thousands of nodes. You don't have that there. So those that I would say that probably those three are the only ones I would ever trust to do anything with personally, with my own funds or really my own coding time. Honestly, I can't think of any other one that I would really ever waste my time with.
Well, the reason I wanted to sort of explore that a little bit was that, obviously Bitcoin is, in terms of cryptocurrencies, has been around the longest. But one of the other things that Bitcoin is, I think, I don't know if this is unique, and this is, again, where I'm hoping to lean on your experience a bit and knowledge, is it has essentially got artificial scarcity. And that is to say that, you will only ever have, is it 21 million, I believe?
Yeah, that's right.
Is the figure? Yeah, Bitcoin. So there can only ever be 21 million. And once they're mined, they're mined. So I don't know how many other cryptocurrencies have got a hard limit like that, or whether or not that is Bitcoin unique.
I don't know of any other that have that. I've not heard of one. If they do, it's a very small chain that I've not heard of.
Yeah.
I mean, like definitely, like Monero is a inflationary coin. I would have to ask Brian about Hive. I'm not sure, but Bitcoin is definitely a fixed limit. It is inherently a deflationary currency. Yeah.
Yeah. So that's an interesting thing, and it's one of the things that, I think it's both good and it's bad. And we'll focus on the good part, is that you can't infinitely inflate you can't infinitely inflate it technically. You can't just print more. Sorry, I'm thinking about fiat money.
Right. Yeah.
You can't just make more and therefore deflate the value of that's already in circulation. So, like that, I would count as being a good thing, because you can manipulate the price or the value of something by doing that, and that's obviously not what you want. Well, I say obviously not what you want. I think most people that hold it don't want that. Anyhow, all right. So, but then I struggle with this whole idea of like, I want to access the Bitcoin that I have on the blockchain. Then I have keywords, and those keywords effectively are my permission to access those funds and to execute a transaction. So, so-called wallet. I think, in a manner of speaking. And I think it's kind of an interesting idea that it's a wallet, but it is, but it isn't. But anyway, so the point is that, but if you lose that access, then, and you don't have those words to recover it, then that Bitcoin is always going to be there. It's just that you don't have permission to do anything with it. It's like stuck there forever. So like it's stranded Bitcoin, I suppose you could say.
And that's also a deflationary thing, because people are going to be losing Bitcoin. Some people are going to be losing some amount of Bitcoin all the time. So there's always going to be even a further downward pressure on inflation there.
Yeah. So I guess what I'm struggling with a little bit is, I forget the way in which governments print more money because they can for their own reasons. That also was intended. The idea of printing more money is you take some money out of circulation and then you reprint more money to replace it, because money is a physical thing, and physical money will deteriorate over time. Money will get lost and go out of circulation and so on. So there's a means for that. But in Bitcoin, if you're fixed at 21 million, you can't actually do that anymore. Like you can't create more. If it's stuck on the blockchain and no one can get to it, then it's kind of gone. It's out of circulation. So that. Am I missing something, or is that is a genuine issue? Yeah.
No, that's a real thing. Yeah, absolutely. You're not wrong. And this is the same. This is where the analogy with gold and silver, or precious metal currencies come in. There's always or any physical currency, there's always loss. that happens.
Mm.
Gold is probably the most apt above any sort of paper currency because it takes a lot to mine it. We know, I mean, there will be a fixed amount. We don't know what the fixed amount of gold is, but there is one. Once it's all mined out of the earth, and there's not going to be any more. And so, going if you lose it, if you drop it at the bottom of the ocean, you're out of luck. You got to go find it, or else
Yeah.
just like if you lose your keys to your Bitcoin, you got to go find your Bitcoin. Now, I mean, on a long time horizon, I think a lot of this stuff fixes itself because you're going to, this is. I'm not going to say this is early days of Bitcoin because it's not. It really isn't. I don't think that's the appropriate language to use. But like if you go back, let's just say you go back 10 years ago, Bitcoin was purely just a wallet scenario where you had to remember a password that was going to encrypt your wallet in some way. Now that you have all these custodial wallet providers there, and where you don't have to deal with any of that if you don't want to, and there's a whole spectrum from cold card hardware wallets where I have to remember my 24 seed words, all the way up to Coinbase where I can just reset my password and I'm good to go. And so there's like this whole spectrum of options for people all along whatever their comfort level is. So I don't think it's some of the worry that was in the past, like oh, I'm going to lose my bit. This is too complicated for people because they're going to have to remember their keys or they're going to lose their stuff. I'm not so worried about that anymore because I think most people are buying Bitcoin and that kind of thing and selling it through Cash App and Coinbase and these other things. So it's only the hardcore nerds like us that are really having to remember seed words and that kind of thing. I mean, I want to. That's what I want.
Sure.
But most people aren't going to have to go that route. So I think that's a long way of saying that the loss of coin, I think the loss of units of Bitcoin is going down. Early days, I would bet you if you looked at a graph, I would bet you 80% plus of Bitcoin that has been lost, has been quote unquote lost. I bet that was 5 years ago plus, back in time, because it's just not as much of an issue as it used to be with all the different options we have now. But you're right. No, it definitely is a thing. It's never coming back because you can't, it would take you, a trillion years to find a collision on a key. So it's not coming back.
Yeah, well, that's it. Because I was thinking, well, we've got with gold, for example, the perfect example is tailings. So we go through and we do a bunch of chemical washes and so on and so forth to extract gold. Mm-hmm. But those processes 20, 30 years ago were not as good as they are today. So we can actually go through those mine tailings and extract even more gold that was missed the first time. But yes, so the idea is that what's the digital equivalent of that? And it's like I was thinking, well, it may take you however many hundreds of years of calculations to try and recover lost Bitcoin. But then if you're trying to calculate or go through all of the possibilities of trying to figure out what those words are, I mean, would there be Bitcoin reclamation services or something like that? Like I lost my words, but then I'm thinking, well, but if you could do that for anyone's wallet, you could do that for anyone's wallet, couldn't you? So it's like no one would do that. So you would just hope that, hopefully with quantum computing advancements and so on and so forth, we don't reach a point where it becomes so easy to figure that out and we have to go to 5 times as many words or something like that to keep it safe. But that's a separate conversation. So I was thinking, well, what happens when we get to 2042 or whenever the last Bitcoin is mined, and the human population will continue to grow. They calculations vary, world wars notwithstanding, natural disasters notwithstanding. We will assume the population will continue to grow, and if it becomes a transactional currency for day-to-day use, let's say, then the question is, well, how do we balance the value that's available to transact against the head of population that may want to use it? And I sort of think that at some point, inevitably, it's going to drive that down to transactions in sats and then millisats at some point, because there will just be so many people wanting to use it. Well, that's assuming mass adoption continues. It may or may not. I don't know. I hope it does. To be honest, I think that it's a balancing effect against fiat currencies, but that's another discussion probably. But I mean, let's assume that it does continue to grow, and at some point, it's like if you don't increase the quantity, the effect is that the value you've got left that each individual can trade is going to go less and less. So the amount of am I making sense, or am I just overthinking this?
No, no, I understand what you're saying. I believe I do. So my relationship to Bitcoin, I think, is practical more than anything. I try not to. I would never. I don't think I would call myself a Bitcoin quote unquote maxi or maximalist, and it's not because I don't believe in some of those things. I think I do, and I'm an Austrian at heart. And as far as economists go, but I really try to have a more sober mindset of it, and I think that one of the issues that we run into when we talk about things like you're describing, like what you're describing is a repricing.
Yeah.
There's a sort of, if you imagine, okay, we're here in 2022, and then in 2042, there's going to be the last Bitcoin mined. Okay, well, assume for the moment, this thought experiment, that in 2042, assume that we are an all Bitcoin economy. Well, so that means at some point between now and then, there has to be a massive repricing that happens within all of global commerce, to where we're no longer pricing in maybe even local currencies or the petrodollar. We're now pricing in units of Bitcoin, in Satoshis. The hard part about that is, and this is where my sort of attempt to be a realist comes in, and is that we've never seen anything like that happen ever in the history of humanity. So we really don't know. I don't think anybody knows what that process would look like. I mean, I think there would be, I can see how it would happen. This is one of those issues where I can see how the sort of end of the process would happen, but the first steps and how everything looks in between, I really have no clue. And it seems like it could possibly be very, very painful to get there, because how do you, the idea that there's not going to be local currencies seems awkward and odd. Look, maybe it's better to say it this way. If you asked me how I think Bitcoin is going to be utilized, and I think it absolutely will become critical to the global economy by 2042, my first reaction would be that it would not be something that is transacted the way that we transact local fiat currencies today. To me, it seems more like a backing thing that central banks or governments or banks in general transact in, and then we continue, and that becomes the backing for local currencies. That would probably be my first guess. Now I may be like, I'm admitting complete fogginess on what the future looks like, but then so I think that would probably, but then you have this other idea of, okay, what we've seen now, where all fiat currencies around the world, every country has a fiat currency that's completely untied to anything. There's no gold backing. There's nothing. There's no hard currencies anymore. We've never seen that either. I mean, this has only evolved since the Bretton Woods Agreement after World War II, and especially in 1971 here in the U.S. when Nixon closed the gold window. There's no more gold redemption. Yeah. So from 1971, until now, I mean, you're only talking about 50. There's only been 50 years of human experience where there's been no backing of currencies by any hard assets. This is unknown to human history. We have no idea what this is going to be like. This could be
Yeah.
this could be this could be awful. And so I think there will be absolutely an inevitable return to some sort of hard asset backed currency. When I mean hard in quotes, just something like, like a gold or a Bitcoin that can't be changed, or even property or whatever. But
Yeah.
that thing, like how we get there, man, that's a mystery. I don't know.
I realize, Dave, that these are long-term sort of questions, and I mean, I also thought about this from the perspective of, well, maybe I'm thinking about Bitcoin wrong. Like, as in so far as it's so different from a fiat currency. So if you look at a fiat currency like a $5 note today or a $10 note today, and compare it to what it was in terms of value perception 50 years ago, they may as well be completely different currencies. You know what I mean? It's like, yeah, what you can get for it has been so inflated away that it's almost an unfair comparison. You may as well be comparing two different currencies from two different countries, and yet it's called the same thing within the same country. So it doesn't. Mm-hmm. Yeah. So maybe if I put aside the longer term concerns of what happens with Bitcoin in terms of what its value is worth, how do we deal with stranded money, accounting for population growth and transactional value and downward pressure on it. I just think about, well, maybe that doesn't matter quite so much for the minute. That's a future, civilization problem. But it's a fascinating discussion, I think, because I think about it and I'm like, the only way this can really work in the longer term is if we get to 21 million and then it's like there's an agreement. It's like, okay, well, this has become really popular. We want to use it for transactions. Let's just agree at that point that we're going to double the quantity and we're going to migrate from one to the other. So one blockchain will migrate to the next, because ultimately you're doing a fork at that point, I guess, because you're redefining the rules.
I don't think that can work, John. I don't think that would ever. I don't think that would ever happen, and because Bitcoin requires it's a consent. At its core, it's what's called a consensus protocol, and so you have to have consensus of such a high number of nodes, a high percentage of nodes on the network to agree to make a change like that. I don't see that. I don't see that as ever being a possibility, because most of your network is never going to agree to devalue their currency, essentially do a split. So you have, the thing is, currencies will reprice themselves. The same way that that they do in the fiat world that we're used to. You're gonna, as currencies inflate and deflate, the assets should reprice themselves accordingly. I think Satoshis is plenty enough. I don't think we'll ever have to go to millisatoshis. I don't think that would be necessary. Or if the way that these things work in a digital world, when it's purely digital currency, that's a mystery a little bit too, because like Lightning internally is millisatoshis, but it can't actually write to the blockchain unless it's a full Satoshi. So your bank account could be denominated in millisatoshis, but if you get ready to do a transfer, it could be a certain amount. That's what I'm saying. Like, I think it feels to me like Bitcoin operates at a lower level than a normal currency. And so, like, I can see how transfers of, just like you can't get onto PayPal and, transfer, 10 cents to your account. Everything is $1 at least. There's like this minimum that you have to meet to do some sort of like transaction. Or you go to, like, around here, if you go to like a gas station and buy a soft drink, they're not gonna. They're like, oh, you gotta spend at least $3 before we can do that, because it's got to cover the credit card fee. So I think when it comes to transferring funds around, these minimums are probably going to just adjust themselves to account for whatever the reality is, in the economy at the moment. There's a really good book that I've had for a long time. I got it probably 10 years ago. It's called The Value of a Dollar, and it's actually a set of books. It's by this Professor Scott Dirks, and it's a university textbook, and there's a few different ones. It's very expensive. I mean, if you find it on Amazon, it's like, $200. But I got it many years ago, like secondhand for not very much. But it's a chronicle of, this guy and his team at the university, I forgot which university it is, they went through and they looked at old newspapers, magazine articles, periodicals, um, all kinds of stuff like that. And they found in all these archives, and they just wrote down every time they saw like an advertisement for something. So they would be like, a pair of slacks, men's slacks, in an advertisement in a newspaper in 1936 in Chicago, or a can of kidney beans in a grocery store in Armonk, New York in 1977. And so they wrote all this stuff down, and they chronicle what things cost, based not on like models or mathematical models or anything, like based on what things cost in the real world as they were advertised in media. And it is just fascinating to go through that book and look at how destructive inflation has been to humanity. Honestly, I mean, like you go back in time, and it's like, when I was a kid, I was born in 1976. You go back in time and you flip through there, and it's like, milk, was 75 cents a gallon. Now it's
Yeah.
$5, $6, $7. It's truly amazing, and the inflation is, we have these pet names for it, like the hidden tax and these kinds of things, but it's really much more destructive than that. I know this is not an economics podcast, and we got other stuff to talk about, but I like it. But really, I mean,
That's okay.
inflation causes people to take risks. It forces them to take risks that they otherwise wouldn't take, because they know, we know that if we put our money in the bank, it's not gonna. We're gonna be harmed every month, every week, every year. It's just going to be. It's going to slowly erode. So we have to do something to make sure that the money that we're saving maintains its value over time for things in the future, like retirement or whatever. So we have to do something. And so the only thing that we can do is take risky bets on things like the stock market, or business deals we may not have been comfortable getting involved in before, or buying too big of a house that we probably can't afford. We take all of these risks because we're desperate for real assets that will maintain their value and index to inflation, and holding equities and other financial instruments that promise us a return. And for somebody like the average pensioner, they don't have any business. They shouldn't have to be doing that. They don't know it. They don't know much about the stock market.
No.
They're not an expert in economics. They really have no business. If you just step back for a moment and look at it sort of on a bigger scale, they really have no business putting their money into things like equities and stocks that they do not understand. But they're forced to. And they get, because there's really no other way, because otherwise inflation will literally eat them alive. We see it a lot now. I mean, with this 8, 9, 10% plus inflation that we've had, but really that's been true even when inflation is at the magical 2% number that every central bank wants to thinks is appropriate. But anyway, inflation is so much more destructive than we think it is. And I saw this graphic today, and it was like this chart. It was like this bar, and like a spectrum laid out in front of you, and then it had zero. It was demarcated as zero in the middle of this bar, and then all the way to was something like negative 100 on the left, and all the way to like positive 100 on the right. and it was a white bar, and in the middle, from 0 to 2, was this red line, and it said, you know, everything on the left is bad, everything on the right is bad, but everything between 0 and 2, that's where you want to live. It was like, this is central bank thinking, is what this is. Anything other than somewhere between 0 and 2% inflation, a positive 2%, anything other than that is bad. And that's just, I mean, what the whole thing is kind of ridiculous.
I think, and we might just have to wrap this up on this particular topic in a second, because as you say, like, neither of us are economists, although you've studied this a lot more than I have. I think the reality I struggle with is that, when you break it all down, nothing's really worth anything. It's just a value that we ascribe to it, and I find it an exercise in frustration trying to understand economic thinking. And I mean understand economic thinking. That is to say, understanding economics is not difficult. Understanding the accepted wisdom that this is what economics should be and how it should work, that's the bit that I struggle with, because economics should not be as complicated as it has been made. And it becomes a thing that becomes impossible for most people to comprehend. I've spent most of my life just ignoring it because it was, to me, so ridiculous. Like, the whole thing was just so ridiculous to me. I find that Bitcoin for me has been a breath of fresh air. It's a fresh take on things. It's not perfect, but you know what? It seems to be quite a lot better than many of the other alternatives. And I know I'm not touching on the more controversial points, but like things like energy consumption and so on. And there's ways and means for that to be handled. I don't mean to dismiss people with those concerns, and that's fine. The truth is, though, that it does have a lot going for it, and I think that I'm glad that it exists. I don't know if that makes me a maximalist or not, and I don't like the terminology. It sort of like puts people into a bucket. It's like, oh, you're a Bitcoin maximalist, and right. I'm like, I'm a what? Is that an insult or a compliment? I don't even know what that's supposed to mean. I feel like I'm glad it exists, and I think that good things will come from it ultimately. But like I said, I just can't help the back of my brain just thinking about the longer term, like, where is this going? And yeah, I mean, inflation is ridiculous. And I have nothing else to add to that, unfortunately, other than I hate it.
2008, Adam had made this point once before, is he's like, if you look at all of the Bitcoin people, I'm excluding crypto, I'm just thinking of let's just Bitcoin.
Sure.
If you look at all the Bitcoin people, many of them are young. If you look at their ages, they sort of had their coming of age, so to speak, or young adulthood around the time of the 2008 financial crisis and beyond. And they really don't trust the system in any way. And we probably all, really shouldn't, because, we saw this past week, Ben Bernanke won the Nobel Prize in Economics. I mean, the guy that 1 year before the 2008 financial collapse said, the housing market's fine. We don't see anything wrong with it. And that, less than a year later, that the housing market in the United States almost brought down the entire global economy. I mean, he's the guy that wins the Nobel Prize in economics. I think that's probably what your frustration with in economics is that, and it's like you see Bitcoin. Mm-hmm. Okay, well, yeah, it's not perfect, and I don't want to be called a maxi either, because I think it's got a lot of tech bro grossness attached to it after all this time. But if you think about it as an engineer, as you are, it's sort of the engineer's money. It's like, I can see how this works. I mean, it's math. This is math. I don't have to get into the squishiness of terms like is the bond market going to, quote, break, which is what we've seen. Like, I've seen these headlines this past week. Is the bond market about to break? Well, what the hell does break mean? I mean, this is not a real word. I mean, like, what are we talking about? How does something either works or it doesn't? I mean, like, there's no broke here. I mean, so I don't know. I think it makes sense that you would get quote unquote Bitcoin, because I mean that's That's the math. That's the engineer money.
100%.
Yeah.
Programmable money. Oh, yeah. All right. So maybe we should put a pin in that economics discussion. I realize that whilst, I feel like we've kind of gone as far as we can go with that conversation without us studying economics at university for years and still being confused at the end of it. So, yeah, we should probably just keep moving, because the next thing I want to talk about relates to the podcasting 2.0 namespace. And I have implemented a lot of these tags, and one of the advantages of owning all the layers in the stack is that I can do this relatively easily on a whim if I want to. So, I mean, currently I'm using like locked, funding, value, GUID, social, trailer, license, medium, chapters, soundbite, images, location,
almost all of them.
Person, which, you know,
Yeah.
which is almost all of them, yeah, because like, new tag. Oh, I can use that. Currently not using live, but that's mainly because I don't do live shows. So, anyway. Have been there, done that. Anyway, as we talked about when I was a guest on episode 100.
Yeah, not a great experience for you.
No, it did not work out well for me. So in any case, doesn't mean I won't do it on a different show in the future again, maybe. But for the moment, the answer is no. But otherwise, almost every other tag. So one of the things I was grappling with is I was listening to, I think it was Mitch Downey and maybe it was John Spurlock. I can't actually. No, it wasn't. It was Mary Oscar Mary. I forget. But they were guests on Podcasting 2.0 several months ago, and they were talking about what could we do with sound bites. You know, could we? And I hate to say gamify because it makes it sound dirty, but in a sense, you know, provide some kind of a remuneration kind of benefit to people contributing. And what got me thinking about it initially was, well, right now, let's say someone wants to do cloud chapters or shared chapters. So you would get someone like, I believe Dreb Scott is helping out on Podcasting 2.0, doing chapter artwork and chapter definitions and so on. And he is then coded in to the main RSS feed split. So he is always in there, and it's sort of like, well, you know, like that's how he's compensated with a percentage of the split, which is you know, fine. But it got me thinking about like sound bites, and could we do something with sound bites that is sort of similar but a little bit more targeted? And so I thought to myself, well, I guess my fundamental issue with sound bites is that up until now, and I say up until now in air quotes because I mean this is still the case, I guess. It's still the case whereby sound bites are in fact defined by the end listeners. So that you go into an app and create a sound bite or whatever else, and share it. So like Overcast was doing this for years. You could share them, and I did this a few times. You know, like it'll actually take the audio, it'll turn it into like an Instagram shareable thing if Instagram's your thing. You know, it's not for me really. I did it a couple of times and stopped doing it, but it's like it's all about encapsulating the audio into a discrete file and then posting a link to that on social media of somewhere. And that's like, this is how I'm sharing a soundbite of the show. So when we started doing work, when I say we as in the Podcasting 2.0 industrial complex, we started doing, you know, hey, I'm just saying, representing, never mind. Okay. I'm sorry. I find the whole industrial complex thing to be hilarious. I know it's supposed to be a running gag. It is funny.
Yeah. It's all for the, the podcast industrial complex is just like every industrial complex. Somebody is getting rich and making all the money. It's just not you.
Yeah, pretty much, yes. So the Podcasting 2.0 industrial complex is the complex that isn't.
Yes.
So, you know, we're providing value for everybody. Anyway, all right. So staying on topic, the point with sound bites is that you can now create them and put them in your feed on an episode item level, and, you know, the podcaster defines them. And so then we've now got this applications, things like Podverse, for example, that will scrape the feed, look at the episode XML from your RSS feed, and say, oh, I've got 1, 2, 3 sound bites. Here are their start and end times and so on. And it provides the interface for someone to listen to them. So far, so good. And I think that that's a better way of doing it because you're using the source audio and the podcaster has control over it. But the problem with that is that you've basically got, well, now as a podcaster, I have to create those in the same fashion that in the past, I also had to create the chapters. So having cloud chapters has been, in some respects, beneficial, but we don't really have cloud sound bites. We don't have shared sound bites that we can actually accept submissions for. And this is the problem that was discussed several episodes back. on Podcasting 2.0. And it got me thinking, well, how could we do that? And so I put in a proposal on the namespace whereby we attach. So the idea is that a client application could be a website, and I build a website to demonstrate how it could be done. Not necessarily how it should be done, but how it could be done, because I'm a bit of a hacker and a slasher when it comes to web development. So I know enough to be dangerous, and let's just leave it there. Write too much stuff in Node and JavaScript, and never mind. The point is that if you were to create a tool that can then save that as something in a JSON format with a start, a time, a duration, title, and enter your name and a Lightning node for a value reference, and submit that to a podcaster, then that podcaster could opt to incorporate that into their feed. So the idea would be that if then that podcaster had the tool to do that, which I also created an example of, if they then ingest that JSON file, they can have a list of those sound bites that have been submitted by listeners, select the ones that they want to put in their feed, and then essentially push that to their feed as another JSON file. So everything is handled in JSON. It's all very basic, very simple, easy, human readable, and you just need a couple of tools to do it. And you could share it via an API if you wanted to be fancy, or you could just do it the cheating, simple way and send it as an email. Send it as an attachment in an email, which is the way I've currently done it. The only problems I've got with some of that is, I'll get to that in a minute. But conceptually, what this then does is it gives you the ability. So let's say you're now Podverse. So Podverse now reads through those sound bites that are in the JSON file attached to the feed, and you've got 3 of these sound bites, and they've got value tags now associated with them. So you could then, for each play, if you've obviously got sats loaded in your wallet, you could then remunerate the person that created the soundbite, basically by playing that soundbite, and hence there becomes an incentive for people to contribute soundbites. And the more popular the soundbite, the more it gets played, the more they get remuneration. So it's not a fixed split; it's essentially a pay per play kind of a concept, no differently to streaming sats. And the only difference with soundbites is that in order to stop the system from being gamed, doing a rate per minute would probably not make sense, because you don't want your soundbites to be more than 2 minutes long. Because otherwise the incentive would be, you're going to stream this to this other person who submitted a soundbite. The soundbite goes for 5 hours. It's like, well, not really what we want. So the only thing I struggle with is more about there's a few things I struggle with. What if you have 3 people that were each 33% split creating that episode, and you do a soundbite? That soundbite would then have to be split, an amount going to those 3 people that create the episode, and a split going to the person that created the soundbite. So you'd have to work through the math behind that. And then what is fair, if it has to be fixed, then that needs to be set by the podcaster. And I thought, maybe to make it simple as a default, you'd say, what's the suggested streaming sats rate? Take that number and multiply it by like a factor of 5 or 10 or something, and say, each one by default is this. And then the podcaster could override it, because maybe they just don't want to set that. Maybe set suggested streaming or whatever rate. I don't know. Like I said. Anyway, so there you go. Thoughts, comments?
I got a lot of thoughts on that. A lot of thoughts on this. Well, because this sort of fits into something that I was actually talking to Dan Benjamin about today. We were we were discussing just like some sharing stuff within podcasting, and what I told him was this sort of like there needs to be a better way to do sharing within podcasting, just in general. So if we set aside sound bites for the moment and just say, okay, how do you share things within the podcast ecosystem? Everything seems very tied right now to the application layer and the share button, the share sheet, and like you said, like emails and these kinds of things, or it's somehow embedded into the application itself. The application has to go scrape up a bunch of content or get people to produce. And so the problem is that there's no like standardized way for these things to get pushed around from entity to entity within podcasting. There's only the distribution mechanism of RSS, and that's where Soundbites started. Was the podcaster can say, okay, here's 2 sound bites that I consider to be, and each of them are a minute and a half long or whatever, and I consider these to be like the 2 really great segments of this episode that are almost like a trailer, where it's like, if you just want to, these are going to be attention getters. These are the good hits. And then, like you said, okay, well, what if you want to go outside of that and put it in the creator's hand and put it in the listener's hands? And now the listener is going to spend their time to create a soundbite. How do they get that back into the ecosystem? There's really not a way to do that. It falls back back to you as the owner of the pragmatic stack to somehow build this into your system, where build a web app, which you did, the Soundbiter app, that will help people do this. And so then you have to distribute that back out. So, and all that's fine, except I guess there's a bigger thing there. And I think John Spurlock's podcast events proposal, his tag proposal, is the first steps to trying to figure this part out, because there's data. What his events tag does is it defines a URL on the hosting platform that says, or whatever platform is producing the RSS. So let's just call it the publishing platform. So it defines a URL endpoint on the publishing platform of the podcast, puts that URL into the feed as a tag, and then describes the events that it's going to accept. And so this, in a standardized way, you could give back events to the publishing platform to tell it, okay, these things have happened, or these types of data are available, or whatever. So you can think of a million different scenarios. You can think of one where you can report back to the publisher, this somebody started listening to this feed, to this enclosure, or somebody started or somebody subscribed to this feed, or somebody or like one we used on the last episode, the artwork of this episode is not working, like it's 404ing, error reporting. Well, in this instance, you could report back and say, okay, somebody just created a soundbite. Well, now the publisher knows the soundbite details, and they can turn around and either put it into, like what you said, which is the, like either the JSON file or the sound bites grouped tag in the feed. Now they can populate that, because they now know that event happened, and we don't have to figure out some way to shuffle files around on the back end. It's just like this single. It technically is an API, but it's sort of an open, standardized API way of doing things. So I think, like, just from a transport sense, I think that's the way. I think something like that is the way forward, because then, like what you're describing, is the final, is like the format, and then we need a transport mechanism for the format. So I think these things fit in together, is what I'm trying to say.
Yeah, I absolutely agree. And when John Spurlock put that concept out there for the proposal forward, for events, that was one of the first things that came to my mind, is that, yeah, we could use this for, chapter proposals. We could use it for soundbite proposals. We could use it for all sorts of different things, which, is sorely lacking, because the way in which we do it now is, here's an email, attaching my JSON file to it. I mean, I know it's archaic. It works, but So for me, I was so yeah, the two proposals absolutely, can work together. There's no question in my mind, and in fact, that is a far better method than sending it by email. But I refer to the title of this show. I try to be pragmatic about it and realize that, look, I don't want to let perfect be the enemy of good here. Let's just get something out there that works, and let's start the conversation. So, I mean, irrespective of the mechanism, and I think that having a mechanism that doesn't require email is definitely the way to go. But I'm not a how should I say, a web API kind of guy. I mean, I've written APIs before in different languages, but as more from a library perspective, it's not my area of expertise. Capable of doing it in a pinch, but not going to profess expertise. But I guess my point is that I wanted to make sure that people start thinking about this idea that sound bites need to be vetted by the podcast creator if you're going to provide compensation for doing it. So I guess that to me is the fundamental problem I've got with sharing sound bites, for example. It's it's a discovery thing, and it's anyone can create sound bites, and it's but if anyone can create sound bites, why don't they? And the answer is that most people, the true super fans of your show, will happily create a soundbite, no remuneration, no interest in any kind of feedback loop. That's fine, that's great, and I love those fans of my shows. They're awesome, and I love them, and that's awesome. But the truth is, the vast majority of listeners to shows aren't like that. But if you then say, well, you know what? If you were to submit these soundbites, there is a possibility that every time the soundbite is played, that you will get a few sats for your trouble. I think that changes some of that equation. It's not going to make everyone want to submit sound bites, but it's going to encourage more people to do it than you have currently. And I guess that's more my point.
Right.
Irrespective of the transport mechanism. So, what I've tried to do in the submission is I've tried to say, well, look, I've tried to think this through as best I can, as from the creator perspective as well as the developer perspective. If you're someone like Fireside, so you're saying you're talking to Dan Benjamin, right? So on the Fireside platform, or if you're Libsyn on the Libsyn platform, if that were to be sent via that API that you're talking about, the events proposal, in whatever format you choose, or as an email and a JSON file that you just simply import into your web interface that Libsyn or Fireside gives you, how they handle that in the back end, I really don't care. It's just a matter of, they need to have the ability, the podcast creator, publishing person, nominated person, needs to be able to select the ones they want, tweak if necessary, and then publish to their feed. How that's done in their web interface is entirely up to them. All I've done is what I've done for my system. So my system works for me. Everything I'm doing is a static site generator using GoHugo. So I manage all my stuff using JSON files because it's convenient for me. And I just run up a node server running SoundBit, and then it goes through and imports and gives you that list. It scans through the RSS feed and looks for whether or not the episode even wants sound bites. So one of the other parts of my proposal is, well, maybe a podcaster says, well, I don't want you to submit sound bites for episode 47 because I've got 20 good ones already. So there's an option for a Boolean in there that says, yes, sound bites are open or they're not. So you can submit a sound bite on any episode that's open. For example, another thing that I was thinking about as well is that, and I'm not saying that everyone should be concerned about download counts, because I realize there's pros and cons and people get obsessed with numbers, and believe me, I've been through that roller coaster. And advertisers, it seems to be more what they care about, that plus conversions, which is another thing. But anyway, so if you are not careful about what you link to, then every time someone plays a soundbite against your episode you're tracking downloads on, for example, it will potentially qualify as a listen. So every soundbite listen is an episode listen, which is, from an advertiser's perspective, disingenuous. So, I feel like, being able to specify and say...
Unless you pay for them and put them in a game.
Well, that's... Oh, that was terrible when I heard about that. Oh, my goodness. But, I mean... Yeah.
Somehow that's okay. But,
it's... Yeah. Oh, that is not okay. Oh, my God. Anyhow. But, yeah, no, that was next level ass hattery. But never mind. I suppose... I guess my point is that you can also then specify in the Soundbites proposal, you can say, well, use this particular file. It's not, you don't have to. It'll default to using the one that's listed in the item in the feed, but alternatively, you can use this particular one here. This file is not tracked for download, so you're not going to mess with your download counts. So things like that, I've tried to think about as many things as I could, but ultimately, it comes back to, would this actually encourage people to do this? So on episode 47 of Causality, I put that in the intro read and said, hey, this is now available to you. You can submit it and so on and so forth. And I have had no submissions. So I'm not entirely sure if it's one of those things that needs to be, I don't know, hammered home a bit more. Like I need to do it for more and more episodes and reinforce. And then hopefully someone might find interest in it. Or maybe I'm barking up the wrong tree. Maybe this is simply something that shows of different scales and or types will have different levels of participation. I don't know, but if you don't know unless you try.
Well, anyway. I think there's a couple of things that come to mind when I say the proposal. The proposal as it's written is makes a lot of sense, and I mean just from a structural standpoint, it makes sense. The only awkward part was the split designation. That one, I don't know. That one's hard. That one's just difficult. I think it's a hard way to address something that's inherently like multifaceted in a single value like that. But I think the issue really, sound bites are hard. They're hard to make. No matter how good the tool is, they're always fiddly, and you got to really get real granular and narrow in on where the thing's going to start. If you're obsessive, if you're OCD, which a lot of people who make clips,
oh yeah,
they're pretty OCD. If you're OCD, that start position and that end position, those things are like critical, and so you end up fiddling with it, and especially if you're in a mobile app, it's so hard. It's just really difficult to get those positions just right. And so what you end up with, you end up spending sometimes 5-10 minutes trying to get just the right clip so that you can send it to somebody, or post it somewhere like Twitter or whatever. And so it's kind of a bigger ask than people realize, because I think a lot of the apps that focus on clips like Podverse and Fountain are two, where they have sort of the clip making mechanism is front and center. That they don't get a large percentage of their audience that do that. It takes some commitment to make those clips. So the pay, the sort of the reward for that makes sense, and rewarding people for that. But I think you hit on something that's part of it, because I'm not sure that the money really matters. And I say that as somebody who I used to, years and years ago, I used to make clips of Adam's show, No Agenda. And so it was, I used to do these short little sound bites and post them on YouTube. And, I did, I don't know, a couple dozen of them. And it would take me an hour to get it together, to get each one of them put together. And I did it just because I enjoyed it. And it was fun. So there's people that do that. And I think the rewarding with Satoshis is more about like when you see it come in, when you see that those Satoshis come in as people are listening to the clip or however that reward happens, it feels almost more to me like that's a replacement for like a like button or a heart in a social media app. Yes, you're getting to what is technically a unit of Bitcoin when that happens, but it's more like it's the feeling that you get of, okay, people are listening. People are using this thing that I created. And that feels really good, because when you just put it out into the void, on Instagram or YouTube or one of these big social media networks, they don't generate a lot of engagement. they don't give you very much back. You don't get a lot of satisfaction. And so I think the money really almost is a secondary thing as money. It's more like sats as a, or satoshis as a sort of substitute for the likes and the hearts and the interaction. It's like, when you look at Helipad and see all these, see sats coming in, it's like, it's just, it feels good.
Mm-hmm.
It feels good in the way that looking at a download stats chart doesn't. I wonder if that's it, because I think you're right. I think the rewarding people, I guess this is what I'm trying to say. The rewarding people makes sense. I think it would encourage people to put in the effort to make the clips. But I think the interesting part of that is the reward is probably not the money. It's probably like just the experience of participation.
Well, I mean, that's true.
Maybe I'm wrong.
No. I don't. I think that's a valid point, and I think that, like I say, I feel like you're talking about the subset of fans that are like the super fans, that they just love the show, they love what you do, and they want to create clips and share it just because they love your work. And I mean, and like I said, I love those listeners. That's awesome. Super fans are awesome. Unless they cross the line and become stalkers, in which case it's sort of,
not awesome. Decidedly not awesome. Yes.
It's like there's a limit. But so they're going to do what they're going to do, and that's awesome. But I guess what I was thinking is, I don't know if incentivization will improve uptake. Maybe it won't, or if it does, you need to be at a certain scale for that I'm not at, or it needs to be a different kind of content which I'm not producing. I don't know. But I mean, I'm trying to think also beyond the scope of just my own, wheelhouse here. I do, what I'm trying to do is sort of like kickstart this conversation about two things. First of all, I think that having soundbite as discrete entries in the main feed at an item level is probably not the right approach at this point. I think we should be considering putting it in a JSON file, just like we have for chapters, for all the same reasons as chapters. Which, having spoken to Mitch Downey about this, I mean, it's not hard to do. It's just a matter of, let's agree that, it's either or maybe we transition, or I don't know. The second piece is we just need to accept the fact that there's a difference between podcaster approved or podcaster submitted sound bites versus clips that anyone makes, because one of them you can potentially provide a feedback mechanism from the podcaster. The other one you can't, not really. So I guess what I'm trying to point out is, well, whatever the transport mechanism is that we use, whether it is the soundbite event, podcast events thing, or whether it's just a silly JSON file attached to an email, whatever, and then the tooling notwithstanding, it gives a mechanism, a standardized format mechanism and structure, so that anyone can submit a soundbite to the podcaster and they can just include it in their feed with a couple of clicks. I feel like that's where we need to get to, and that will improve the number of people contributing, and that just makes it better for everybody. Whether or not value is something that's a part of that or not, I saw that as an opportunity potentially to, and again, I use the word gamify. I mean, incentivize, whatever you want to call it. But, I feel like that's an opportunity, and I feel like, if we can just agree a basic set of rules, then potentially that could be, I don't know, something that we could consider. I don't know.
I think what you're talking about, this is one of those concepts that requires layers, and you have to build in layers. And I think that's the only way that things like this gets done, because it's multifaceted.
Sure.
So you do have the transport issue. You've got the approval issue. You've got the format issue of the spec and the protocol and the way that's got to look. There's a lot of parts there, and so when it comes to things like this, my preference is just, and this is like the oversimplification, is get a base level spec, and you've done a lot of this work here. I would almost remove the value block stuff to begin with, and so that you have this thing. It's like, okay, what are we trying to accomplish here? It's like we're trying to accomplish the sharing of crowd created sound bites.
Mm-hmm.
okay, what is the minimum thing that we need to have in order to get that done? And then that thing is the thing. So, and you mentioned Mitch. So Mitch is committed 100% to sound bites. That's what he's always been about, and clips. So to me, something like you say, okay, we start with this layer. It's like you've got a proposed protocol for sharing sound bites in a JSON file. That thing can go into production with somebody like Mitch and say, okay, let's prove this thing works. And then once we see that works, now it's like, okay, well, step 2, what makes sense to add the value stuff in here? Should it be attributes in the tag? Should it be external, some sort of something external to that in some other way? Should it be references back into a split? Like you can then that's step 2, because that's complex. To me, I get muddied and confused when we try to like take a thing that's complicated like this and solve it all at once. I'm almost apt to want to have the sound bites tag just live initially without the value stuff. What does that make you feel like?
Oh, I mean, I'm happy to take an incremental approach. That's fine. There's no reason why we have to put value in there straight away. But I guess the only counter to that are the concerns around value. Is that something that we can resolve quite straight in a straightforward manner? I mean, I can't help the way my brain thinks and wanting to try and solve, and thinking forward about, all the permutations. It's just the way my brain works. But I suppose, with the value block, for example, it comes back to me, it's a simple thing of, well, you've already, the app that's doing the value streaming, it already has the details from the main feed. It's just a matter of deciding, well, you know what, let's just agree a 50-50 split. 50% of that goes to the creators of the episode, 50% goes to the person that submitted the actual soundbite, and then just let the math work itself out and say you can't have less than, I don't know, 10 sats or whatever, however many, and code that in on a client level, and then essentially let the rest shake out in the math, because that math already exists for the split at an item level for streaming sats on an episode. So all this is really doing is it's simply passing that as a single fixed amount using the same math.
Right.
But I mean, the whole idea of having a 10x multiplier, for example, as a guide, maybe we just ditch that as a concept. It was just a question. We could simply say,
the idea here is you have, if I'm following you right, you pass the JSON file with all the soundbite details in it.
Yes.
You pass that to the feed publisher, and then the feed publisher modifies the XML in the feed in the sound bites tag to publish that back out as part of the feed. Correct. Okay. Yeah. So that the JSON file is easy to represent the value stuff because we already have the JSON for that. That's what we pass around on the back end of the index, and that's just that's really straightforward.
Yep.
Once you translate that into XML, it gets funky because the XML for the value tag has children that for the value recipients, and so you almost need at that point the soundbite tag to have children, to have value recipient children, to make the most sense. Otherwise, you're because I'm thinking of, here's what I'm trying to avoid and this is going to come up because you can attach value for value to any part. You can attach it to lots of parts. You can attach it directly to chapters. You can attach it to sound bites. You could attach it to events even. You could attach value tags to a bunch of stuff. What I'm trying to avoid is that you would end up with two different ways to extract, two different layouts for the value information depending on where you are. Like that the value block looks one way, but then when you go to parse out who gets a payment in the soundbite, it may look a different way, and then when you get to chapters, it's going to look a third way. So the consistency where it's like, okay, value is always going, and I'm thinking of parsers here. When we go to ingest, value is always going to look like this. It's never going to change, and that's that I think is not hard to do in the soundbite tag, because you could gracefully fall back and say, well, if the soundbite tag has text in its node value, well, then it's a traditional, like what you might call a V1 soundbite. But if it has value recipient children in the, or, if it's got a value block in it, well, then that's a V2, or so to speak.
Yeah. Okay.
I mean, that will at least let you take this, because I've got this single unit of data, which is the value block, and I'm going to drop this thing in everywhere. Anywhere there's a potential for somebody to receive sats, it's always going to be, this thing is the thing I'm looking for and expecting to parse. To me, that has great value, because otherwise things just get really complicated from an ingestion standpoint.
Yeah, I think I understand what you're saying. I guess because there was talk. I was talking to the different developers over the last few months, and there is an interest in standardizing, like having a standard value block representation that you just put in where you need it.
Mm-hmm.
And I didn't really want to wade in on that necessarily. For me, the only thing that's the only point of concern for me with the value in soundbite is simply how the client interprets it. Like, you can put it in the block, you can have it in the feed, you can have the JSON file which is linked to the feed, and all of that is all easy enough to do. It's how what are the rules for the client? What does the client do with it when someone plays the soundbite? Mm-hmm. To make sure that the credit goes where it goes to. And I guess what I was thinking is, and this is now completely not thinking about this is thinking about the podcast creator or creators and the podcast soundbite creator, and thinking about it from that perspective, not the technical, how do you ingest it, how do you parse it, and so on, which is its own separate problem. But if someone is taking 2 minutes of a show that you and I record, then you and I would have a split between us when we record. That if someone were to listen to the whole episode, they would, that split would go to each of us. And then if someone has a soundbite of 2 minutes of that, then it would make sense that some of that money for that period of time gets split between the creators, which would be you and me. And then, of course, a fraction of that goes back to the soundbite creator. So I kind of feel like, because I thought about, well, it'd be simpler if you just sent it all back to whoever created the soundbite, but the person creating the soundbite didn't create the content. And that's where I kind of mentally got stuck. And I'm like, but the problem with that is that if that's the thought process you take, it leads you down that road of, well, then I've got a split of a split. And, now what links to what? Because the only wrinkle, to be honest, from the ingestion point of view that I've struggled with is, it's easy if you've got an item level value split for streaming sats to go with this, because, the JSON file for the soundbites is linked to a single item. Therefore, they line up perfectly. That's easy. Where it gets more annoying is, well, what if you've got a value split at the top of your feed at a feed level, channel level, not at an individual episode level, at which point then you have to... So then soundbites would then get split against the top level split. And if you've got different guests and you haven't broken it down, then how does that work? You know what I mean? Like, that's the only thing that I kind of got stuck with, because then it's like, well, then you're sending value to people that you aren't taking soundbites of. And I'm also,
right.
you know what I mean?
Yeah.
That's where I actually mentally got stuck. And
yeah, well, we've almost run into that same issue with our show, with Podcast 2.0 show, is that we've ended up, what Adam's ended up doing is he just puts a full value block in every episode. And and so it's like, okay, here's the thing. We recreate the whole block. We don't have the block at the channel and then extra people in the episode. It's like, it's just, okay, every if the episode has a block, it's a complete override of what's in the channel. You ignore the channel totally. And I think you're sort of hitting on that idea that it's like, well, if you have to start layering these things,
Mm.
that's way too complicated.
And obviously, I want to avoid complexity, but at the same time, you got to discuss it and have an agreement and say, well, you know what,
Yeah.
this use case, we don't do a split because you can't really split that if you've only got a channel level definition. But
Well, you need the other part of the value tag as well, because there's not, in being being not a maxi here, there's other cryptocurrencies out there, and
oh yeah,
we have to, there's the value block was specifically made to be able to handle anything that you could throw at it. And so if there's like you'll need that top level definition also, because somebody might want to share clips and get reward. If it's the Monero podcast or the Hive podcast or whatever it is, man, they may not want Bitcoin, they may not want Lightning, they want
Hive power.
Want their own thing. Yeah, Hive power. They may want lots of Hive power. So you can. So then that's where that's where the attributes having the value destinations and the value information purely defined as attributes on the soundbite tag, that's where you run into a problem, because you're now there's not enough fidelity there to know what is it assumes Lightning.
That's true, because I guess if you've got someone who's contributing a soundbite and but see, that comes back to your wallet problem. So if let's say right now, I'm not aware of any podcast client apps that support anything other than Lightning. So I guess if you were to think forward to a point in the future where there is like an LN Pay equivalent for Hive, so a Hive Pay, let's say, wallet, you spin up a Hive Pay wallet, you spin up a LN Pay wallet, and it's part of Podverse, let's say, then you'll have two different balances. At which point then, if it supports it, that is to say, the Soundbite contributor supports Hive and they've got a Hive address for their wallet, then it would simply split that out to that wallet. But how we handle multi-currency splits,
yeah,
I don't. It's like it's either all one, all the other. That's easy. But if it's part Hive, part Lightning, how does that even work? Because the value of a Hive, this is coming. It's like everything needs to be for an individual episode of one currency. Otherwise, it's not. It's extremely complicated to do, because you'd have to have a fixed rate or fixed amount in either Lightning or Hive, depending on which you support.
Stepping into the theoretical here for a second.
Yeah, sure.
This may sound, when people hear us discussing the intricacies of things like this may sound just like, oh, this silly. Why would this is too complicated? Why would anybody want to fool with this? This is goofy. But I think it's naive to think at this point that cryptocurrency, in some shape, form, or fashion, no matter what it is, Bitcoin, whatever, cryptocurrencies are not going anywhere. I mean, if anything, we're going to become more crypto with central bank digital coins that are inevitable. Things like these concepts, these tools of cryptocurrency they're only going to become more entrenched in what we do. It's not we're not going back. Let's put it that way. We're not going back to the way things used to be. This is a thing that exists now, and we're going to have to integrate with it at some point. So it makes sense to work these things out now. And that's one reason why we didn't try to do 50 different cryptos or all these kinds of things. We focused like, okay, we know Bitcoin, we understand how it works, we understand Lightning. We're gonna settle on this because Bitcoin seems the most like money. It operates the most like a money, and we're going to settle and do this one thing. Now, in the future, we can figure out like what you were talking about a while ago. These multi-currency splits and all this kind of stuff. That's a big mess. But we'll figure that out when we get there. But you got to have the foundation first, because it is a thing, and it's going to. I guess I just kind of. That's something I think about often. Is when I hear people talking about cryptocurrencies and as if it's sort of like optional, that you don't have to think about this thing, that it's just like it's a fad or whatever. It's no, that's not how this works. it is a thing that is going to be with us for a very long time, and that's going to become even more and more true, I think, over time.
I absolutely agree. I guess I mean, yeah, okay. So I mean, I know I went way off into the future there, and thinking about multi-currency splits and so on. And of the three that we've spoken about today, like Monero and Hive and Lightning. I mean, if we want to be pragmatic about it, we just have to pick one and stick with it and simply say, well, for the moment, the standard only supports sharing of a single currency type. So, like the podcaster says, well, I will, remunerate sound bites in Lightning only because, the rest of the podcast only accepts Lightning, and it make it that simple. Like if you want to, as a podcaster in future, support all Hive, then you say that. If you want to support all Monero, you say that. And you can handle the multi-currency split by essentially saying, I don't handle multi-currency splits, because, I mean, you could look at this from any street vendor's point of view and say, well, I'm selling ice creams. What do you accept? And it's like, well, I only accept Solana. And then you're like, what? Anyway.
Well, too bad I don't have any of that.
It's like, no, just no. Yeah. But anyhow, sorry, Solana fans out there, if there's any left. Yes, but all right, cool. Well, look, this has been good because it's a chance for me to sort of like, because I can't have these sorts of conversations with just anybody, Dave. So
you shouldn't. You should not have these conversations with anybody. You would have less friends, John.
You're probably right. So yeah, let's not push the other friendships out there. But in any case, yeah. So look, I appreciate your time talking through all of this.
Yeah, sure.
And I know that when we were on episode 100, I was sort of hoping that we would have a chat about it, but Adam was really keen to talk about music, and I didn't want to, because as Dan is so famously says, it's your show kind of thing. It's not my show, so it's your show. So I was not going to push it. So I thought, you know what, I'll just get Dave on Pragmatic and talk about it, because why not, right?
Hey, and sounds good. I will talk this stuff anytime of any day.
Awesome. Fantastic. If you would like to talk more about this, you can reach me on the Fediverse at Chidgey at engineered.space, on Twitter at John Chidgey, or one word, or the network at engineered_net. If you're enjoying Pragmatic and you'd like to support us and keep the show ad-free, you can by becoming a premium supporter. Premium support is available via Patreon and through the Apple Podcasts channel subscription. Just visit engineered.network/pragmatic to learn how you can help this show to continue to be made. Thank you. A big thank you to all of our supporters. A special thank you to our silver producers, Mitch Bilger, Kevin Kosh, Shane O'Neill, Leslie Law Chan, Kellen Frodelius Fujimoto, Jared, Bob, Joel Ma, Katarina Will, and Dave Jones. And an extra special thank you to our gold producer, Stephen Bridle, and our gold producer, known only as R. Pragmatic is a podcasting 2.0 enhanced show, which is what we've been talking about today. How about that? And with the right podcast player, you'll have episode locations, enhanced chapters, and real-time subtitles on selected episodes. And you can also stream Satoshis and boost with a message if you like. That's a Boostergram. And there's details on how you can do that, along with our Boostergram leaderboard on our website. Now, if you'd like to get in touch with Dave, what's the best way for them to get in touch with you, mate?
Probably on the Fediverse, Dave at podcastindex.social, or email Dave at podcastindex.org.
Awesome. Fantastic. Well, once again, a special thank you to all of our supporters, and a big thank you to everyone for listening. And once again, thank you, Dave, for coming back on the show. It's always a pleasure.
Yeah, love talking to you, John. That was always great.
Thank you. Okay, I will add that to my to-do list. Thankfully, there's only 39 other things on it, but that's okay.
Right. Yeah. Yeah.
Oh my God. All right, cool. Excellent. Because I mean, the thing is about my Tesla, I love my Tesla. It's a beautiful car, but it's got problems, and I can absolutely understand why people don't want to drive them. And it's just like they did a software update about a month ago, and it gives you these alert warnings when you drift too close to the center line on the road. And honestly, I'm nowhere near crossing that line. Like, seriously, if I were to get a ruler out and measure how far, I'd have probably at least, I don't know, 4 or 5 inches before I'm going to cross that line. And then it does, emergency steering correction applied for safety. And it goes beep, 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 beep. And I'm like,
whoa,
what? It's like they made...
Oh, that would drive me nuts.
I know. And the worst part is you go into the screen and you say disable it. And you're like, yep, it says if you disable this, it won't try to correctively steer. And I'm like, yeah, I know. Leave me alone. Let me drive it. And so you disable it and you're like, 2 thumbs up, everything is good. So you reach your destination, you go on, have your coffee or whatever, you get back in the car again, and it automatically re-enables every time you hit drive. And I'm like, oh. So it's stuff like that makes me want to punch the screen. But I haven't yet. So the screen is still intact, but there may come a time if they don't fix it. So it's just stuff like that. Like I never had this problem driving my Honda Jazz. You know what I mean? You stick the car and you twist the key, away you go. And
yeah, I just really don't want my car making. I don't want my car making decisions for me.
I get that.
When I jump in the truck. I jump in the truck. I throw it in neutral. I start roll. I take my foot off the brake, start rolling, crank it up on the way, then throw it into second and go. And it baffles my children. They're like, "How did you crank the car with it rolling down the road?" I'm like, guys, this vehicle doesn't know. It's dumb. It doesn't understand anything. All it knows is when you press the gas, go. When you hit the brake, stop. And that's all it cares about. And this is exactly what I want out of a car of mine. I don't want it to make any decisions for me.
Well, I'll tell you one thing that blew my kids' minds, similar to that, is I had a flat battery, as you have with a manual. So every now and then, any car, sorry, but as you have with a manual, you can just roll start it, right? So
that's right.
Here I am. Yeah. I'm towards the bottom of a hill, but there's still enough of an incline. So you get that car, you push it down the hill, and then the car started, and they're like, "How the hell did you do that, Dad?" And I'm like, "Oh my God, this is what it's some kind of magic, isn't it?" It's like, no, it's just I tried to explain it to them, and they just like a blank expression. "I thought you needed jumper cables, Dad." I'm like, "No, you don't need jumper cables."
Have you ever driven I don't know what the stick shift history there is in Australia, but have you ever driven a car or a truck with a stick shift on the column?
Once
manual on the column.
Once, many years ago, back in when I was really young, like I was 17 years old, my grandfather had an old Holden Torana that had a manual shift on the steering column. I drove it for a total of about maybe 30 yards. That was it.
Okay. Yeah. It's just like a 3-speed, but you pull the lever back and up, that's reverse.
Yep.
Back and down is first gear, back forward and up is second gear, and forward and down is third gear.
Yeah. And
so like this, I took my truck to get the tires replaced a couple of years ago, and so it's sitting out in the parking lot, and the guy, this old dude behind the counter, he was like, he said, "Is that your truck?" I said, "Yeah." And he said, "Okay." And so he got all the stuff together, and he said, "Hey, so-and-so, some teenage kid." He's like, go pull the truck into the bay.
Oh God.
And so the kid, he's like 17. He goes out there, and that old dude was like, he's like, "Yeah, let's see if he can figure this out." And he got in there and he just stared at it for like 5 minutes, and finally he came back in. He's like, "Hey man, I don't know what to do."
Damn. I love that I've seen cars with stickers on the back, and you probably got the stickers over in the States as well. It's got a picture of a like a stick shift gate, the 6-position manual shifted gate, and that's on the sticker, and it says millennial anti-theft device fitted.
That's right.
I just love that so much.
100%.
It is so good, and it's so true, and it's funny because my daughter had a traumatic experience. In other words, she kept stalling it on a slight hill.
Okay.
When I was trying to teach her to drive my car, because I'm trying to say, kids, get your license in a manual, and then you can drive a manual or an automatic. Whereas if you get stuck with an automatic, you can only drive an auto, because we have, the rules in Australia are if you get an auto license, you're not legally allowed to drive a manual.
Oh, I didn't know that. Okay.
Yeah.
Okay.
Yeah. So, I mean, I actually think that's a good call, because frankly, I've watched some people that don't know how to drive a manual try to drive a manual, and it's comical and dangerous. So anyway, but
Yeah.
but my
sure.
my oldest son, he insisted. He's like, "Nah, I'm down for this. I am learning how to drive a manual." And so he gets in now. He's got his license. He's on his provisional license now, so he can drive without me sitting with him. Anyway, so he's out and about driving. He gets home. He says, "Oh, Dad, I love driving a manual, just like windows down, blaring my stereo." And I'm like, "Yeah, it's pretty awesome, hey." And he gets into my daughter's car, which is an automatic, and he's like, "I hate this car. It's too boring. It's just there's nothing to do. I don't like it." And I'm like, "Yes, he understands. I get
He's
it.
an old soul.
He is an
He's
old soul. He is." So I think I'm grateful that so far at least one of my kids gets it. And I drove manual cars for the vast majority of my life. I drove my Honda Jazz, which is a 5-speed manual, in and out of the city in Brisbane, which is a good hour commute each way, like 5 days a week for 5 years, in rush hour traffic. So, I mean, I was a hardcore manual driver. So for me, my Tesla has been the first automatic that I've bought for myself. Actually, come to think of it, ever, because I was given a Ford Laser hatchback when I was younger. My mum gave that to me as a hand-me-down, and then she made me give it back when I went overseas. It's like, but
Ford
Laser.
Laser. I wonder what that compares to. I wonder
sure.
what the equivalent
There'd
of
be
that
some
is.
kind of an equivalent in the States, but it was a 1988 model. It was a
Okay.
it was a piece of, well, it was a Ford Laser. I don't know what else to say, but it's like a...
Also called the Ford Meteor.
Oh, yeah, that sounds about right. Yeah, it was a hatchback, but it was automatic. But technically, I didn't buy it. It was given to me, so therefore... Every other car I bought except the Tesla has been manual. But anyway, never mind.